The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the Monday edition, April the 29th, almost wrapping up April. Isn't that amazing, huh? So, with that said, let's, thank you, Steve, for 2 great hours. And, of course, straight after me, it's Monday. Comes Larry Pesavento. We've got Daryl Martin. Don't forget Daryl and Tom. I think it's 2 Saturdays' time. We'll be in the Boston area with that free 4-hour webinar. Just check it out. It should be fabulous. You've got Dave White. And then, of course, 4 o'clock till 6 o'clock. Tom O'Brien wraps the whole day up, gives his perspectives, and gives a great look forward and analysis of the different indices, etc. So let's go straight to the market. The Dow is up. Now, this is what I did over the weekend. I spent a lot of time on chart work that, in fact, has nothing to do with what I want to buy, what I want to sell, what I want to... It just says, hey, look at the market as objectively as you can. Keep in mind that in a bear phase, it's just a real simple technique. Besides the volatility index, what I talk about all the time, which is down at 13.48, which is really showing buying intensity remains. There's just a real simple rule of thumb. Just think back to all those times when the market has been in a sell mode. Every single opportunity to rally was absolutely decimated very quickly as the bear market washed over everything, so that any news, good or bad, was treated as bad news. That is the characteristic, and keep that in mind. It's really important. I'm going to mention it again if I can, if I remember at the end of the show. The characteristic of a market is that when bad news is treated as bad news, good news is treated as bad news, no news is treated as bad news, that means the bear phase has begun or is in process. The exact opposite happens on the upside. Look, there's just a dearth of news, and whatever news there has been, even Friday was not very good news about the jobs, etc. But look what happened. The market held very well, even though there was an intraday pullback, market closed, kind of mixed. But this is what you want to look for. Now, within that context, absolutely what I'm looking at is a rotational aspect. And the rotational aspect says that in the overall market scenario, you've got stocks. If you're looking at Tiger TV right now, give me 1 second here. I just want to get this up. Let me click here. It will take 2 seconds. I like to see what you see. So I'm going to go to tfnn.com. Just get Tiger TV. Just click on it now, just so that not only do I have everything else in the background, my different computers. There you are. What I'm looking at this particular point is the E-minis. Whoops, I got a little volume there. Let me get rid of that volume. No, not there, right there. Okay, we're all set for the day. Here we go. So what I'm looking at here is that there was a cup formation, a beautiful left side, right side price time at, folks. Believe me, there are just a couple of techniques within the ChapmanWave methodology. If you can pick them up, if you can absorb them, if you can just get the very best, the benefit from those couple of techniques, besides the ChapmanWave notation, I can tell you right now that there's just a really good chance that it'll up your ante. It'll allow you to identify so much more. Whether you use it or not in your own trading, it doesn't matter, but it's there. All you want is the weight of evidence in your favor. And look at this. You've got the left side, right side price time match in the 120-minute S&P. This is the actual cash S&P. Goes to a peak D from the low bar of, I should have put it up, 1539.50. And that was right there about the 5th of April. And runs up where? To a peak D in the ChapmanWave. goes to 1596.68, pulls back in a left side, right side price time match to where it hits exactly at 1541.05 on the 18th of April at 11:30, tries to bounce and goes 2 bars later, goes to a deeper slide. What's the rule? If you undercut the left side low on a closing basis, that's one thing. But if intra-bar, you can bounce off, that can give you a very sharp rally. Well, look what happened. The high of 1597.35 in the 1597 area, the high on Friday, on the 25th, was 1591.96, just under it, pulling back, and now we made a cup formation, kind of like a V, but I'm going to treat it like a cup formation. Same principle, with a little handle. Not my favorite pattern, but it's a pattern that we will look at nevertheless. And that says there's a chance, a good chance, in fact, that the S&P will take out the 1591.76 area and try to tackle the 1597.35 area within a couple of days. Could happen very quickly, but it might take a couple of days. That's number one. Number two is that the daily chart made a peak F-top. I'm calling it a peak F-top on the 11th at 1597.35. They put in a little hat there, a little inverted V-shaped cap, and a carrot we call it, and it's gone to leg A, gray B, in a new buy signal, which is really close to a buy mode. It hasn't given me the buy mode yet, but I can tell you this, that if it closes above 1597.35, that's a long way to go. It's another 7 points up. But if it does that, leg E in the weekly chart and leg whatever it's going to be, an extension of this buy signal to buy mode in the daily chart. A breakdown occurs if it goes underneath 15. It's at 1590 right now. A breakdown will occur if it gets underneath 1580. I'd have to say 1586 to 85. Breakdown there. In fact, what was the low of the day? 1582. 1586.85 says good chance you're going to retest the bottom of intraday of the S&P today. So the Dow is up 64 at 14,776. The S&P is up 9 at 1571. It's actually up 8.21 right now at 1590.45. The comp index is up 25 at 3304. That's nice action because Apple, hey, that is great action, and we're going to watch Apple very closely. I actually like the action in Apple, but for my opening core subscribers, I am so selective now. We had a short on BIIB. This is Biogen IDEC on Friday. I had a 1% stop. And the reason I had the stop was that if it worked, it would have been great. If it didn't work, 1% and we're out of a $200-something stock. And that's the selectivity you've got. At the same time, we bought a stock at $8.56 on Friday. Today is trading at $9. It's up almost 5%. So I'm being so selective. Our other stocks are acting. We've got only longs. I have no shorts. Are acting well. 3 out of the 4 are up. One of my favorites here, which I think is a portfolio manager quiet favorite, is also up very nicely. So we've got gold now. This is very interesting. Here's gold. Look at this. Remember, I spoke about the GLD. I made a whole thing about it, that I had a very unusual, it's a technique that I developed a long time ago. I don't use it very often because it doesn't happen very often. It's called a climactic volume spike. It's a climax low bar. And what happened in the GLD at 130.51 on the 15th of April, there was a huge volume spike. And what I'd said is, it doesn't tell you how high it's going to go, although it's going to go higher. But it does say there's a good chance that it could take 28 to even 50-something bars before it comes back and retests at 130.51 in this case area. And it's a huge kind of like an inverted bowl formation, not like a cup that's steep, but just a slow up move. Then it curves, then it flattens out, and then it comes down. Says to me that the 144 to 145.30 area is probably going to be where we've got to watch closely to see what happens in the GLD. But the GLD is acting very well. Beautiful candle last week, as I mentioned from the previous week. I love this kind of action. It's kind of like a little dragonfly hammer kind of candle on the the week of the 14th of April. Very nice close last week, and now we're breaking above it. 146.68 is the 9-period exponential moving average. And that is the resistance, strong resistance. And also, I'm watching for April. I'm watching this candle here in the monthly because that's going to turn out to be, I'm pretty sure, a ChapmanWave Roman candle, which says you don't have to know when, but there will be a test of the candle halfway into the candle of 136.92 at some point, and probably if it does that, it's going to take out the 130.51 low at some point, looking out in a couple of months to come. Let's go to Mark in Fort Collins. Hi, Mark. How are you?
Basil, how are you?
Very well, thank you.
Good. So I didn't take the BIAB trade on Friday.
Okay, good.
But I did jump in at the round number high today, a little bit after that when it kind of started creeping back up there. Bought some June 225 puts.
Okay, so let's just talk about this for a moment. It turns out I was talking about, folks, Biogen, IDEC, Biopharma company, one of the great companies, big presence here in the Boston area. Now, this is very interesting. I haven't called it a recycle anything. Everything about it right now, I'm calling a leg F in the monthly chart. Everything about the weekly chart right now, I'm calling a leg D. There is nothing technically wrong if you look at this chart, unless you look very closely. And if you look closely, you're going to find that there's one particular index that I follow closely, and that says it is within moments of at least a pretty good pullback. Now, the reason why I didn't want to do anything today is because if it extended this leg F up, I would be looking for other clues in the daily chart. Well, you just named the major clue, and I've already typed it in. I noticed it early this morning. 225 round number high, but it had a round number on, the reason why we shorted it was a round number close of 216 on the 25th of April. Now, that 216 before would have become a very important resistance if on Friday this thing closed at 212 or 211, and today was down. The fact that it's gone higher turns the 216 area into at least a modicum of support. You don't mind that, because if this drops to 216, that's a 7-point gain. That's a nice gain. Now, this is what I'm looking at. When I go to the 120-minute chart, I've got this in a leg E, and the stochastic's at 69%. That's not very good, but it is trending up a little bit, and the MACD did spike to the upside, but it isn't even close. It's been essentially making lower highs and lower lows on each high bar in the 120-minute chart, and that 120-minute chart goes back to the 2nd of April. 199.54 was the high. Then again at peak E at 209, round number high on the 12th of April. And now we've got leg E. So the history says leg E's have been, even an F, have been peaks in the 120-minute chart. So I think you're right. You're on the right track, and we'll talk about it a little bit more when we get back with Mark and Fort Collins. Dow's up 68, S&P's up 857. Basil Chapman, 877-976-84.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direxion Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirexionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxion Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direxion Shares. To obtain a prospectus or summary prospectus, please contact Direxion Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. We're back in with Mark from Fort Collins. Mark, if you don't mind, I'm just going to take a moment here to break away for something else, because if I don't mention it now, I'm liable not to look down at my notes here for the rest of the show, and then I will have missed it. Today, in fact, is the day that they're going to do the extension. In 1929, what happened was I think it was 28. In 28 or 27, the Chrysler building was built, and they, in the dead of, well, not the dead of night, but very early in the morning or late in the evening, they suddenly erected this tower, and the tower itself turned the Chrysler building into the tallest building in New York and the tallest building in the United States. Then along came the Empire State Building. All the papers were signed in July, a long weekend of July, September, the Memorial Day weekend of 1929. At 386 was the Dow top. That was the month that the papers were signed. And the building opened 18 months later, and was called the Empty State Building instead of the Empire State until 1952, when they made their first profit. So I wanted to mention that. Why? Because today is the day that the Twin Tower, the tower that was selected as a memorial, is going to have an extension put on it to make it the tallest building in the West. This is what I heard in the radio on TV this morning. The tallest building in they say the Western world. I'm not sure if that's accurate, but that's what I thought I heard. But it is certainly the tallest building in Manhattan. Now, once again surpassing the Empire State Building. But at the same time, what did they say? What was on the news? That the Empire State Building, which was, for me, the icon of man's ego, a statement to his ego back in 1929, well, in 1931, when the building was opened, 18 months after it, when the papers were signed, after the building the foundation was laid. Well, what's very interesting is I just heard that the Empire State Building wants to go public. So I'm starting to get just a plethora of a whole bunch of things. I was asked about this on Thursday and Friday, so I wanted to bring it up to date each time I hear about the Trends Watch icons that I look for that are setting up the fabric for some pretty major market top. I'm not giving a date or a time. I'm saying that it is within the coming year, within by maybe this time next year. I think we will have seen the signs of the kind of activity that we always look for and look at market tops. Well, looking at the sector itself, the biopharma sector, the biotech stocks themselves have been an incredible run, and they look like they are extremely overbought technically, but I'm also beginning to suspect, I don't know if this is the big one for the biotech sector, but I suspect that we're also looking at the biotech, the leaders of the biotech, if they're the ones that are starting to show signs of, let's put it this way, signs of toppiness, then Biogen, which has been one of the leaders, should be there. And what I'm looking at right now is that I quickly did a study here. I had done most of the notation of the 120-minute chart, because although I should have been long this thing, I missed a really great long entrance and never got a chance again to go in. But in the 120-minute chart, since the low, the doji low, the long-legged doji low of the 15th of January, 139.72, there's been 1, 2, 3, 4, 5, 6, 7. There have been 7 peaks that went to at least peak E, and a number of them went to a peak F. So even if they were worth in another pullback and another pop to the upside in the daily and the 120-minute chart, it's signaling that you've got to be a little bit careful here. Now, you've got over 3 weeks to go for the option, correct? This is not a week.
I bought the June 225s.
Oh, you bought June. So you've got May and June. Oh, I've got, in options. I'm sorry, what?
I'm at $1 in the money as of this morning, so I'm just kind of trying to figure out if I should make 225 kind of a mental stop to get out of those over that. You are really good at trading this. So I'm not going to advise you, and this is just the parameters that I'm going to give. I suspect that a core position of whatever you've got now is going to do really well. Within that context, if it goes above 225, I don't know if I get too excited. You've got so much time. If it went above 228 or 230, I'd say, okay, lighten up a little bit. I think you're going to be looking good. But yes, you've got to have a little bit of caution here, but I think looking out, this thing looks like 211 is the target. So congrats.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Hey, that's interesting. Got a couple of emails at the same time that we were on with Mark saying that some other people had put on a short position and puts for the same stock we're looking BIIB. All I can say is that this is one of the great winners, and when you do this, you have to have techniques that are in your favor. So far, we've got 2 important techniques that are working, and the most important one here will be the 225 round number. What was it, 224, 225 round number in a Biogen IDEC. However, the MACD is at 80%. It should be stronger, but 80% is still darn good. And the MACD is still acting well. Haven't got a signal there, and I haven't got a signal yet in the stochastic, which is at 80.78. But I do have the 120-minute chart that says every other time the maximum we've gone to is a slight peak F afterwards. This happens so many. 1, 2, 3. We've got peak E's 1, 2, 3, and peak F 4. We've got peak F's about 4 and peak E's about 4. So, this is just the best opportunity. What I was saying is that if it goes a little higher, that's one thing. But if it goes to a parabolic move now, that will not only be a final thrust to the upside, there's no telling where it could go afterwards. So I would still say that if you are short, then you need to have some kind of stop. If you have a put,
ironically enough, the put is the best position because it gives you, you know exactly the price, you know exactly what you need, and it gives you a lot of time. And in this case, Mark was out into June rather than May. So that's a long time. And I think even with premium shrinking, I think that that's going to be a very good trade. So now let's go to this. I wanted to talk about, I wrote it down here. Give me a second here. WY. Now, WY is a stock that we had at one point way back. I don't have it on this particular chart. I wonder if I do have it. Way back. Way back. I think it was back May or June of 2000. What year is this? 2012. And I believe it was in the 19 to 21 area, maybe. I just don't remember offhand. I've got it written down, but I don't have it right now. And this thing screamed all the way to the most recent peak F top at 31.97. What is it? Weyerhaeuser, which is involved in the rebuilding, say, for Sandy, infrastructure. The CEO was on back with Kramer back on the 25th of January when the stock was at 30.95. And he was talking about shipping logs to Asia, China, Korea, 68% wood products and housing, hiring people, rebuilding at 30%. The rebuilding is 30% of the business still to get to 1 million to 1.5 million. Traditionally, I think that's rebuilding of houses. Now, look at this. Look at this double top that's forming here between the high of the 24th of January, 31.74, a whole brand new buy mode that went to a peak F top at 31.97, and then the most recent high of round number 32. You see, I like to look at certain things that happen infrequently, but with great significance. And I found over the years that the technique that I call the round number, it could be intraday, it could be a round number close, it could be a round number high. It doesn't matter. It's especially the round number, the silent ones are really important. But if it's at a potential top, then you've got to look at it and say, hey, what on earth is going on here? Because if it can't get through that round number, it's telling you exactly that the round number will become more and more important. But look at the deflection in the MACD to the downside so far. Look at the deflection in the stochastic in the daily at 68.17. Now, even more important, if you look at the weekly, if you look at the weekly chart, that was a daily. You look at the weekly chart, there is a potential here for a peak F. If you look at the monthly, there's a potential here for a peak E. But wait a minute. The MACD and stochastic in the weekly chart, that's the middle chart. Remember, I always look daily on the left, weekly in the middle, monthly on the right. If you look at this paper and timber lumber company, Weyerhaeuser, the MACD and stochastic failed completely to confirm the rally. That's very negative. Yet the price is held very well. It is under the 9 EMA, but the week has barely started. It closed just on the 9 EMA last Friday. And now we've got to say, wait a minute. There is a chance that there's a rectangle consolidation going on. And if, in fact, the candle of April is to be our guide, then 28.91 is going to be absolutely key. If it breaks that, then 28.20 is the 9-period exponential moving average in the monthly chart, which it hasn't closed under since it broke above. No, it didn't even. Oh, yeah, just for a fraction back in May of 2012, a year ago. But really, since it broke above it in January of 2012, it's been above it. So this is going to be very important because it's part of that whole materials, the HGX home builders. There's something else going on in the housing that I need just about another few days, maybe another week or so, to really assess. I'm not talking about chart patterns or anything. I'm talking about the Boston area, the greater Boston area, and I'm putting together the Northeast because I'm including the somewhat what I know about Brooklyn. Not so much Manhattan, but more about Brooklyn. And this is, I think, is going to be really, really interesting. So the HGX index it's so close to making a new recovery high at 198.06. It's done it. It did it this week. Today, he just went to leg E. I'm calling this a leg E, but actually, D, E, F. Well, I'm just for now, I'm going to call it a leg E. That way it coincides with the potential of the S&P. I like things to be in sync. I can have an alternate wave count. I should have an alternate wave count. I'm just going to give it the benefit of the doubt for now. And this is still leg D up in the because of today's high in the monthly chart. This is the Philadelphia Housing Sector Index. So that's going to be very important to monitor. Here's another thing, and this is going to be. When I talk about a rotational correction, how are we going to go to this next peak and what is it going to do? Well, if the housing sector remains buoyant, that is, even if there's a pullback, the HGX is at 196.04, having made a new recovery high. All-time high was 217. Oh, and this one, 293. 293 back in May, was it? August of 2005. And look what's happened. Very nice recovery in a bowl formation. It's getting into, look, we'll draw a horizontal line. It's getting into where the low was, 186.82 back in July of 2006, and then it ran up to where? It ran up to 257, and then it made the H pattern that I talk about, failure, and it broke down. So I'm going to be watching this because this whole area between 212, that's another 6 points high, 6 points, no, 212. It's 20 points higher, and the high of 257. To me, that's going to be absolutely critical over the summer, over the summer. Can it get there? How does it handle it? What is it going to do? And so that's the home builders. And I just have to constantly emphasize, if you are really smart about investing in terms of having owned homes or done any building, that is the perfect time to be looking at rental income. If you have capital that you don't want to keep in, say, bonds, you say, you know what, I could get a much better interest rate, but there's something else that is very rarely spoken about, and that is if you have really good management of property, that is absolutely critical. You can survive if you have capital and you have constantly good management, cost-effective management. If you are reckless or careless, and you've never done this before, or you think, oh, this is just fantastic, I'm going to get my 13% for the rest of my life every year after taxes, be really careful. If you've never had to put on a new roof, if you've never had to do any of the stuff that's required at the spur of when you least expect, when you least can afford it, to suddenly do your $10,000 worth of plumbing, or else you don't have plumbing. There are things that happen. You've got to be aware of that. So in your mind, keep thinking, stocks, I can go right now, I can go click, and then I can go click again. Houses, you need lawyers, you need contractors, you need to have your home assessed, you need to have an inspector. It doesn't happen in a day. You need someone to be able to pay for it, then get mortgages. There's a whole bunch. Selling doesn't take a click. Selling takes a long time. It does take a click when you've got buying frenzy, and we're getting to the buying frenzy time. This is why this is the perfect time for selling a house that you need to do some repairs on, but you don't want to do it. Why? Because if people are bidding, they're going to say, okay, well, we'll do it. Don't worry, we want the house, we'll pay. When they don't want it, when it's slow, you have to do not only everything, but you have to constantly lower your price. So keep that in mind. It's really important. So here we go. In terms of, I wanted to look at Apple. The reason why I liked it, but I didn't really think I wanted to trade on it, only because at 420, it was at 409, 408 when I was looking at it as a potential adding to my list for my subscribers. My thinking was, if I was to judiciously choose other stocks, preferably lower price stocks, the percentage gain with the same kind of chart pattern is really what I'm trying to do.
And that would be the best way to do it in my opening call. That's my daily service. So far, I believe in the trading gods. Let me just say, so far, it's working very nicely. In fact, so far it's working really nicely. The stock we bought on Friday is now up over 6%. I don't know what's going on there. I love the chart pattern. I was expecting a leg D, and then we were going to just raise a stop and it'll tell us that's exactly what we'll do. But this is a monster move for this particular stock. So that's the way I'm trying to play it. I'm trying to be as judicious as possible. Why? Because my time price match says we're coming into the first, maybe it's the second week, I'm not sure, of May. And that's where I'm going to get a lot of signals that are going to say, hey, sell in May, but don't go away. That's kind of what I'm going to be looking at. Not necessarily sell in May, but rotate in May and go and stay. That's really what I'm looking at. There's going to be price action that says there are some stocks that you just do not want to have in that period. But there are other stocks that are, for instance, I'll give you a good idea. I've been talking about JCPenney for quite a while, and I said that the characteristic, the quality of what I'm looking at, and this is going into December, had changed so dramatically in 4 or 5 months that in the same store, I've only been to a couple, but in the same store, that I was just saying to myself, that is, it just opens your eyes and says, look what people can do if they really want to do it. That's number one. Number two is the kind of bearish talk was just unbelievable over and over. Number three, the monthly chart has what I call, well, I don't call it, but there's a particular pattern called a declining wedge formation. And a declining wedge formation says you make a V-shaped pattern going to a pinnacle, going down on the downside, going to the point. And as it's coming into the low of that trend line, there could be a powerful move to the upside in the rising wedge to go above the higher trend line, the resistance, and that says it could take it all the way to 20.11 in the monthly chart. At the time I was looking at it, it was down in the 15s. Well, it went to 17 into the 17s on Friday because of, can't remember, there was something, a positive. Oh, Soros was going to be buying some. And then they got some kind of funding, I believe, now, and funding was the big issue. Well, it wasn't that, because I don't know the fundamentals. I don't know about the company. I'm only looking at the chart. But the chart was saying, wow, this is a very oversold, technically oversold stock. The MACD and stochastic have been rising in the daily chart beautifully. This is a stock that I would like to own as a kind of small position, a buy and hold Rip Van Winkle stock with a fairly liberal, because it's a smaller position, fairly liberal stop on it. But really the bad news was out, the bad news was out, the bad news was just pouring. It was like a waterfall. Now I think there's a chance that there could be some recovery. And I don't think it's going to succeed altogether, but it's a chance to really move with the stock with very little risk to the downside. Now, of course, it's bounced a lot. Today it hit 17.70, trading right now 17.14, 17 round number low. So it's on my list. And I think that in a poor market condition, this might be the kind of stock that has some good staying power with upside potential. I wonder if their preferred stock, there's a preferred stock. I might even look at that. I'll be right back. Basil Chapman, Dow's up 65.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, the Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, we're back. I have to chuckle. There are people in the den talking about their tenants, that awful tenants. I have to tell you something. I was going to talk about that. I thought I had, but I guess I forgot about it. Tenants choosing a tenant. Well, I don't know how much choice you sometimes have, especially with restrictions these days. But it is absolutely. My first tenant when I bought my two-family house many years ago, it was just two-family, and I wasn't living in it. It was just a rental income property. My first tenant came with the house. That was the first mistake. Second mistake was that the real estate agent. The firm was owned by the detective in the city that I had it. That's what I was told. The third one was that the tenant who came, one of the tenants that came with it, biggest mistake, is the person that I had to evict. He was known to every single cop in the whole city, let alone the detective who owned the real estate agent. I mean, this guy cost me thousands to get rid of him. I learned a really good lesson. And after that, I never, ever had trouble after that, because you learn certain things. But people have to know that these are the things you got to be wary of. So, okay, I want to just take another look. I have to. I'm not sure if Larry is around. I have to congratulate Larry Pesavento. He made a most fantastic call on Apple. He said, I believe it was $393.
and I believe that he had bought, he wanted his subscribers to be buying puts, and he spoke about it. And Apple right now is at 429. That was just on the way down. Now, 397 was for me the 200-period exponential moving average, and I've spoken about that a long time ago as potential for the downside, but we had no trade. Talk about it is one thing, and have no trade is another. But I had drawn the kind of pattern that I was looking at, and so far, the 9-period moving average, exponential moving average in the weekly chart, which is exactly where Apple is right now at 429, 430, if it closes above that, let's say it closes, if it even closes at 431, that'll be the first time it's closed above the 9-period moving average since it broke down. This is how beautiful this technique is, at 676 back in October, the week of October the 5th of 2012. What a beautiful technique that was. How silly of me not to have traded it just the way I talk about it. It's a repellent line, and that's the way you got to look at it. So congratulations to Larry, because Larry says, don't confuse lucky with son. No, Larry, we've seen your techniques. That was just a fabulous, fabulous trade. So now let's just go to our nitty-gritties. We're about to wrap up. We're going to hand it over to Larry Pizzavento in a few moments. Pleased that he was there and was able to respond. But that's not the response we want. We want you to say, that was my technique. It was. Let's just do this. I'm going to give you the parameters to look for right now as we wrap up for today. Don't forget, my service is the opening call. Go to the front page of TFNN, 2 weeks free. You can subscribe. This is just a perfect time to be getting to understand that ChapmanWave. And, of course, I'm an advocate for the ChapmanWave. It's the waveform that never sleeps. The Dow has made a new, what I call a gray leg B in the daily chart. It has held the up channel trend line. It's gone right back in. It went under it, which is never very good, but it's gone right back. The MACD needs to cross positive. Now, there are two ways of looking at this. Either it's very positive because, look, the MACD has all that way to go before it gets overbought. Or you say, if it deflects lower, this price is going to make a double top and turn around. Stochastic is running at 60%. I like it up at 80%. So far, the price is moving, and that's really what you want to look for, and it's turning into either a V or a U-shaped pattern. So far, that's very good. If the Dow goes above 14,887.51, that starts to be conservative. I'm calling it leg D. Officially, it's really leg C, but I'm calling it leg D. The S&P, though, if it goes above the previous high, and that high was 59,751, goes to leg E, and there's that up channel resistance. I'm still expecting higher prices this week and maybe even next week. Then we're going to be careful. Thanks for being here, folks. Stay tuned for Larry Pizzavento, and I'll be back tomorrow. Have a great day.